This is Troy from Option Omega, and today we're talking about bearish trades in 2022. It's not going to be hard. 2022 sucked if you're a bull. We're not talking about bulls today. We're talking about bears. We're talking about people who have been in a John boat the last 10 years, just trying to survive. Who this year, they traded that John boat in for something a little bit different. Yachts. So let's look at a bearish trade in 2022. Now, one thing you'll quickly recognize if you've ever been just pure short in a bear market is that you can get your face ripped off because there are some vicious bear market rallies. So you might think, well, I could just have bought a put in January or sold calls spreads in January and I would have been fine. You could have been, but you might not have been. In fact, it's actually kind of hard to find a super bearish trade where you didn't get your face ripped off for at least a good part of it. This one's a little bit different and it's interesting, and it has a huge caveat at the end that I'll tell you about. But what we're doing here is this is a short call spread, and it's actually a very simple trade. It's SPX, and it's year to date, last run August 12th. And what we're doing is we are selling a 50 delta call that's 45 days out, and we're buying a call that's 25 points past that. So it's a 25 point short call spread. We're opening it every day, and we are trying to open every day, but we're not using the exact day DTE. So we might buy, or sell a call spread that's 50 days out, 52 days out. The tester's just going to try to find one closest to 45 days to expiration. And our only exit condition is we're going to get out at a 25% stop loss. I also have some miscellaneous stuff in here just to try to make the test more realistic. So some opening and closing fees and some entry and exit slippage. And what you'll notice is that this is actually a 100% win rate, but we've only traded this 15 times. And what is it doing? What this is doing is only selling this call spread when we close above the 100-day simple moving average. That's it. If we close above the 100-day simple moving average yesterday, we're going to put the trade on. And what you'll notice, we have a pretty insane CAGR for the year, a pretty light drawdown for 100% win rate. This is Intra trade drawdown. And we started in this test with 25,000 in capital, and we ended with 96,000. Again, 100% win rate. And we were in the trade pretty much the whole time because we just let it expire. We have no profit target. We're just letting this run. So as you can see, it has worked quite nicely so far this year when you just sell the 100-day simple moving average. Now here's the caveat to this. We are in the midst of one of those, again, vicious bear market rallies. If you look at SPX as of today, August 15th, we have been on quite the tear in the last month. And here is the simple moving average. So if this trade is going to work, it's going to work pretty soon. We are going to drop down again, or the trade will no longer work. We're going to continue being in a bull market that we've been in for the 10 years, or the bear market rally is going to be over, or whatever. The bear market will be done, and we will just keep rallying. So the caveat is we're now at this point where we are above the 100-day simple moving average. But again, it is a worthwhile test to think through, to look through, to think of ways to say, if I do have a thought where I am a bear, I don't think we've seen the bottom yet, or I certainly don't think we're going back up to all-time highs this year, it might be something you want to consider. You can sign up today at optionomega.com. No doubt there are some gold in these hills where you could test things out and perhaps find something even better. Feel free to do that. Hope you guys have a good day. Bye.